Thank you so much for coming on to the show. We have a lot to talk about as tax season is approaching. I thought, what better than to have James come on the podcast and kind of teach us a little bit of a crash course about crypto taxes and with crypto startups versus individuals, forms, anything you would need to know kind of to be successful this tax season. We're going to be talking about it today. James, feel free to get into your history, how you ended up in the crypto space, anything that would be interesting to know about your story.
Right on, Vanessa. Appreciate you having me on first and foremost. So really excited to be here. But yeah, to answer your question, my name is James. I am a CPA. So I went to San Diego State University, originally from California, and got my CPA, went to PwC. Actually was there for 2 years and then decided to go travel. So I was doing merchandising in Vietnam at the time. And then I get a call from my buddy out of absolutely nowhere who I'm in a fantasy football league with. And he's like, hey, do you know anything about crypto? I'm like, I own some. Does that count? He's like, good enough. Hop on a call. 2 hours later, was on the call with a crypto reconciliation firm. Did the interview, thought I bombed it because I didn't know anything. Ended up getting the job and then flying back about a week later and started my crypto career. From there, then did individual reconciliation as the actual CPA, specializing only in crypto. Put myself through an absolute crash course, got good at it, and then I jumped to my current company to lead U.S. partnerships at Sum.
That's amazing. And let me ask you, so did you have any prior like accounting experience before crypto, or was this like, I guess how did that interview go to start? Because how did you get the job after not really knowing much into crypto? And I guess let me ask you too, what year was this? Because I feel like that really matters as well.
That's an excellent question. So I'm what's known as a personality hire, if you've heard of it. And, so I got
can
an
tell.
interview. I just told them, I'm like, yeah, I don't really know much about this. My buddy put me on the call, and here I am. So they really took a chance on me, which I sincerely appreciate. And the beautiful thing about crypto, so I've been in crypto about 1 year actually. The beautiful thing about crypto is that you don't need that much experience if you get good, because there's not 10 years, 20 years of history here. It's just, young people could get in, get very specialized in a niche, and then all of a sudden you're the subject matter expert. It's really crazy. I didn't expect it. I'm not, frankly, I know a lot smarter CPAs than myself. But when you choose the right niche, specialty, something up and coming like crypto, I mean, things can happen, and it's been definitely a crazy year. I'm very thankful for everything that's happened.
Yeah, that's amazing. So would you say that as long as you have the foundational information that you would need as a CPA, that it is a relatively easy adjustment towards crypto, or do you think that there are like changes within that somebody would need to be prepared for?
Great question, and I just realized I didn't answer your last question fully. So I was at PwC, and I was actually doing audit. The only tax experience I had was one part of the CPA exam, which it's a tough exam, but you really don't learn until you do. So I walked into that interview with literally zero tax experience, never, besides doing my own very basic taxes. I mean, I didn't know what I was doing. And here's the beautiful thing about crypto is that you can make headwaves and you don't actually need your CPA. Because the CPA, frankly, is very counterintuitive to crypto, the way it's taxed, the way it's treated, the whole processes. So I see these young kids that I was working with at my old firm. I mean, they're 23, 24 years old. They've been in the game about a year now, same time as me. And they're starting to drive value because, frankly, traditional CPAs, who I talk to all the time, have no idea how to handle it. And it's really freaking them out. It's a pain point. The IRS is coming down, compliance, regulations, becoming super mainstream, and people are looking at it like, what the heck is this?
Yeah,
So nothing required, actually. Just, put your head down and learn it.
I was gonna say, I talk to a lot of people on the podcast who have like no foundational information in education in crypto to begin with. So a lot of people in this industry are self-taught. And with that, you're right, there's so many advantages to get ahead, to get a good spot in this space in your career, to be able to move up the ladder a little bit faster. So I'm glad that you said that. I think that's important for people to know just how much opportunity actually is here in the space. I will tell you, I took a few accounting classes in college, and I was just like terrible at accounting, so that is like I relate on the personality aspect because that is literally quite literally me as well. But
Yes.
no, we're so glad and lucky to have you on the show. So let's like let's get right to it and kind of talk a little bit about crypto and like taxes and accounting and stuff. So what, I guess the biggest thing that I think a lot of people misunderstand, and you had mentioned this in your outline too, and we can talk about it, is that a lot of people don't understand that crypto is taxable. So maybe you can go into explaining how crypto is taxable and in what ways would it be taxable.
Oh, 100%. Especially when I started, I would go to these conferences, Bitcoin Vegas specifically, talk to people and be told, I'm like, hey, I'm a CPA. And they're like, oh, well, crypto isn't taxable. Most common misconception in the world. People really think that because they do DeFi and they think that's invisible, which is actually ironic because it's all on chain. I could go to Etherscan right now and see exactly what you've done.
Oh yeah.
People think they're hiding, they're not. The IRS is smarter than you think. Actually, they hire people that know what they're doing. So, first of all, crypto is taxable. Secondly, it's taxed as a capital asset. It's not like traditional income outside of staking, but the NFTs, the DeFi, the swaps, the bridging, liquidity pooling. Every time you do something like that, it triggers a taxable event. And that's where the term cost basis becomes incredibly important and why it gets so complex very quickly, especially to traditional accountants, because if you're on a MetaMask and you bring it to a Phantom or a Coinbase, they don't know what you bought it for. So Coinbase is going to issue a 1099, which is great. However, if you transferred it in there, they're just assuming the cost basis is the fair value on the day of that transfer. Not the case. And that's where people get in trouble with the IRS. I'm seeing it all the time. Thousands of 6174A letters are being sent out. In certain cases, CP2000s, which is notice of deficiency, that's when you're actually in trouble. And
Love that.
It's because people, even the people that are filing, they are claiming ignorance because it's true. They're handed a tax form and it's not accurate. It's like, how the heck is the average trader going to know that? So takeaway, it is taxable. It is complex and it's a specialty, especially with meme coin guys.
Right. So let's break this down a little bit more for people that are listening. So for example, if I wanted to buy and hold crypto, which I relatively do now, let's say I'm just buying and holding crypto. So if I'm okay, great. If I am actually if I am increasing my profits in crypto, but I haven't sold, that is a taxable event, yes or no?
No, that's not taxable. So transfers, not taxable. That's a misconception too. You're good there. Just track the cost basis appropriately because when you do sell or when you do swap, that is taxable. It's treated as a sale. So that's the biggest thing to be cognizant of. And again, it all comes back to the cost basis, but also appreciation or depreciation of an asset, unrealized, not taxable.
Okay, so in any case, would there be any case where crypto is non-taxable besides like what we just talked about?
The only thing is, so when people enter liquidity pools, those staking rewards, they are taxable, except it's taxed as ordinary income. So it'll be in the US, it will be on Schedule 1, whereas the other ones will be on Form 8949 and Schedule D. And those are capital asset forms. They're in different tax brackets. Schedule 1 income is much more easy to account for. It's the 8949 that gets people in trouble more often than not.
Okay. So, and I'm kind of just asking questions on the top of my head here for everybody. So, if you are on Coinbase and you get your 1099 form, so is that, I guess let's go into this in different avenues so people can kind of understand deeper. So, let's start with Coinbase. So, let's say I'm on a centralized exchange and I'm working with Coinbase and I've been trading there all year long. And I get the 1099 form. Is there anything else that I should have or I should know? I know like CoinLedger has software. Maybe you guys have software I'm sure for crypto tracking. Like, let's take this like step by step. What are the first couple steps that somebody should have down to do this successfully?
For sure. So it really depends on how advanced of a trader they are. If you are someone like myself, that's a buy and hold. I went in on Coinbase. I hold it on a Trezor, which is a different wallet, but I don't do a lot. I'm not doing all the DeFi. I'm not on chain. I'm not in Phantom. I'm not doing all that stuff.
Right.
So that's more simple. And if you keep it in Coinbase and you just have a cold wallet or whatever, you're good. Those 1099s will actually be accurate. However, most traders and most people in this crypto space have upwards of 30 wallets. I've seen up to 500 wallets, transferring them in between, doing all sorts of this crazy stuff. And that's where people get, confused. So for the average trader, someone just getting started, I think starting on a centralized exchange would be a great start, and try to consolidate it as much as possible because it keeps your taxes a lot simpler.
Yes, like one wallet. Like if you're just starting
One
out,
wallet.
don't go to like 500 different wallets.
No, especially because that you actually bring something up. Not to get too in the weeds, but the IRS is now requiring people. Formerly, they used what's called universal cost tracking versus wallet-based cost tracking. And universal cost tracking, all that means is that, say I sell crypto for Bitcoin for $100,000, I bought it at 50. I bought it on a different exchange. I could use that tax lot, the highest one, and assign it to that sale, which reduces your capital gain to as small as possible. Now it requires wallet by wallet. So every single wallet is treated as its own entity. I can't pull from a Phantom and assign it to a Coinbase sale. That's no longer permissible, creating huge headaches for people that have been in the game for 10 plus years, and there's a lot of them. So that's something to be very cognizant of. Just try to practice what's called wallet hygiene. Keep your wallets clean. Try to limit the transfers from a tax perspective, but people do what they have to do.
And let me ask you, why do you think a lot of people have multiple different wallets? Like what is that for, like tax advantages, or what would you think they do that for?
They're trading on a bunch of different platforms for one. So they're doing all sorts of stuff. On a Phantom, for example, you got to buy Solana. Then you got to transfer the Solana into Phantom. And to get on chain, you're interacting in Solana for all these meme coins. So people just get very deep into the web of crypto. There's a lot of great exchanges there. MetaMask being another one that's actually a partner of ours.
Oh, nice.
And yeah, we're inside that app. So shout out to MetaMask. Great
Nice. That's awesome. I love it.
Yeah, all sorts of different reasons, but primarily to get on all these different exchanges and wallets. I mean, there's just different things you can do in different platforms.
Okay, yeah, no, I like that. So your top recommendation for beginners would be to start somewhere simple, maybe start on a centralized exchange like Coinbase, only one wallet. If you're not that big into crypto, just holding for the long term, and then therefore when you go to turn over that 1099 form, there's a higher chance, or it's most likely going to be accurate for your taxes, which is less of a headache for everybody, is what you're saying.
Most definitely. You're going to thank yourself for that. But the only caveat here, and look, it doesn't really matter for people not holding exorbitant amount of money on there, but there's a term in crypto called not your keys, not your coin. What that really means is when you're on a centralized exchange, you don't actually own that asset. You own it on paper, but Coinbase, they're holding all the crypto, and when you go to withdraw, they send you somebody else's crypto. So the hash code is not really assigned to you. You get a new one. Where on-chain or on a wallet, for example, you are actually holding your crypto there. So when you're withdrawing it, so say it happened with Celsius. They went under and they didn't have enough liquidity to cover all the withdrawals. And all of a sudden, someone's in jail, a lot of people are out, a lot of money. And that's the only risk there. It's called not your keys, not your coin. And that's a big concept to understand. However, for most traders, it's not of high risk, to be quite honest with you.
Okay. And so how does this come into play with people that do have who do have multiple wallets? Like obviously they're not going to just need a 1099 form. Let's say I made a mistake and I have like 8 different wallets. Like how would you orchestrate me to move in the best direction possible if I had multiple different wallets? Like what forms do I need?
100%. So you're going to need a form 8949, Schedule 1 and Schedule D. That's for anyone, even with the Coinbases. You're going to need to file those. So that's what the IRS is looking for. Schedule 1 for the ordinary income, like staking rewards. 8949 Schedule D for the capital assets, which is everything you're really transacting in crypto. This is embarrassing, but I actually forgot the question.
Oh, you're good. Don't worry.
Long day.
It's okay. Me too.
I remember now.
Go.
So this is actually why I have a job. And it's how I did it from a crypto accounting perspective is you have to use a crypto accounting software. You can't go to a CPA. If you go to a CPA that handles crypto, they're using a crypto accounting software. So that's where I work. I lead partnerships at Sum, formerly Crypto Tax Calculator. And what you do is you upload all your wallets and exchanges. It'll automatically classify it. If there's anything wrong, it will tell you. You'll properly classify it. And then you go ahead and hit download your 8949 Schedule 1, Schedule D, send it to your CPA or upload to TurboTax, and you are good to go. So it frankly is a necessity at this point. Everyone at our company uses it, obviously. We all own crypto.
Yes, that's the assumption. So okay, that's a good point to mention. Yeah, like crypto software. So your company, you said that your company like do you guys have one that you sell or just one that you use yourself?
Both. I mean, we use it because we need it. But
Right.
yeah, we sell it to wallets, exchanges, and of course, accounting firms. And hundreds of thousands of retail users as well use it on an individual basis. They just go self-serve and they handle it themselves. So Coinbase is a partner of ours. MetaMask, we're actually integrated into their app. So if you go into the tax section, you'll see some pop up. You can go ahead and download from there.
Awesome.
It's a full integration.
And what does that look like? Because obviously I just buy and hold crypto, so I'm not a day trader. You know, I'm not using multiple wallets. I'm very simplistic in my involvement in crypto. So I guess how does that? I mean, you don't have to show us, but I'm just saying in regards to are you tracking every single transaction that you ever do and the amount and the time?
Oh yeah, it's
Okay.
Pretty robust, and I'm actually going to share my screen here.
Perfect. Yeah, let's do it.
All right, so this is sum.com. As you can see, formerly Crypto Tax Calculator. We actually rebranded today, so we're brand new.
Amazing.
But we've been around 8 years, so this is perfect timing for a podcast, actually.
Cool.
However, so how this really works is I'm going to do this for a retail client. We're in 180 countries, but we're looking at America right now. So you'll go in and you'll go to your accounts tab. This is where you upload all your wallets and exchanges.
Perfect.
We support 3,600 integrations, so if it exists, it is covered. We have an incredible dev team dedicated to keeping these supported. So we'll start with a Coinbase here. You could go ahead and either upload it by CSV, sync it with an AI API, or just log into your Coinbase directly. And what that'll do, you'll see it reflected here, but it'll pull into the transactions tab. So you'll classify it as a trade. You'll go ahead and see what you bought it for, what you did, and then the associated gain loss. So this is the most important thing to ensure it's accurate. From there, you'll go ahead and download the reports. When everything is done, everything is reconciled, you'll be able to see, okay, I had 605 in gains this year. Great, that's gonna be taxed at the capital gains rate. Download the report. These are the 3 you're gonna need. Schedule D, Schedule 1, 8949. TurboTax will have a place for you to drop it in. And you're good to go. But where this gets sticky for multiple people is they've been trading since 2012. They've never paid taxes on it. So what do we do? That's where this becomes incredibly important with the timing and classification, because everything is pulled through to the exact second. So the price, the cost base is accurate. And the IRS, when they hit you with an audit, they're going to want to know these things. So that's the big scary word for clients, for users. They don't want the audit. They already make a lot of money, or they lost money and you could actually harvest that loss. But you want everything tied out, because if they come looking and the crypto part is wrong, which is what they're going to look at, then they all of a sudden open Pandora's box and you're dealing with a full-scale audit. And, as everyone knows, if someone goes looking for something wrong, they're going to find something.
Right.
Yeah.
No, this is excellent to be talking to people about and teaching people about, and definitely want to recommend this platform to people. And I guess how would you guys go about that if somebody has been trading even since 2018, for example? Do they need to go back into their trading history themselves and then compute all this? Would that be a recommendation to them?
Yes, and without a software, I will tell you, it's virtually impossible, because there is so much data, there's so many classifications and so many years and so many cutoff periods that you need the software. But the beautiful part is when you upload these wallets and exchanges, it pulls in all of the historical data. So
Nice.
I've worked back to 2007 before, and you could go ahead and get caught up, and the reports will classify themselves so you own capital gain tax year by year. Sometimes you have losses during a year. You could carry it forward 3 years. All of a sudden, you reduce your capital gains tax significantly, especially if you've been scammed, by the way. Many people have.
That's really good to know. We're going to talk about scams and stories that you have in a moment. I just want to clarify. Oh yeah, that's like a whole nother topic. But I just wanted to clarify for people. So if you insert your wallet into here, is all the transactions are being pulled from your wallet, or is that something that you're doing manually yourself?
No, it's all pulled through.
Amazing.
Everything is pulled through. That's what the API is for. And some chains don't have the data feed to do an API, but what you do there is every wallet in the world is going to have an option to download the CSV, which is why in Coinbase, for example, you could upload this file and it'll just be a giant Excel file of your entire trading history, drop it in, the software will pull it through and reflect it in that transaction tab.
Wow, that's awesome. And then so what you got,
helpful.
I'm like, Jesus, like people need to know this education and this information. So that's incredibly helpful. Now, let me ask you, before we do get to scams and stuff, well, first, on the personal level, is there anything that you missed that you feel like people should know? Like, is there any other additional information that you want people to know about personal taxes? Maybe like common mistakes that you see. I know the biggest one is people think that crypto isn't taxable, but like, anything else before we kind of briefly go into talking about like startups?
Keep it simple. KISS. Keep it simple, stupid. That's what I would say. Consolidate as much as possible. Don't have 500 wallets. Frankly, most CPAs in the country don't even know how to handle it at this point, and they're doing guesswork too. No offense to anybody. There's a lot of specialized crypto accountants out there. People are catching on fast, but the average CPA has no idea and they won't touch crypto.
Right. And also, like, if you are starting out in trading crypto, let's say you want to be a day trader or you're doing staking, whatever it is, have the software at hand. Start on the right foot. Make sure. Yeah, like, I mean, obviously, if you're starting in crypto and you're listening to the podcast, you're going to know what forms you need. You're going to know what software you can use. Like, hopefully, we're helping you get on the right track to make sure that you're trading safely so you don't run into trouble down the road. But I agree, keep it simple. And if you are just trying to dabble into crypto, one wallet, potentially trading on a centralized exchange, and then working with people in the industry that can guide you better is like your best avenue. Obviously, you do not want to avoid not paying your taxes in crypto. And we are encouraging you to make sure that you do this every single year as tax season is approaching. So I think you did great, James, explaining all that information. And we'll have a bunch of resources listed below, like what forms you need again, just so it's clear for everybody. But so when we're talking very, very briefly about crypto startups, what are some common mistakes that you might see in crypto businesses as well? And I know there's a lot we could go in this direction about, so like feel free to keep it simple.
Look, no, this is a great question. Businesses, stablecoins are taking over the world right now. It's replacing ACH payments because it makes complete sense. So the influx of crypto transacting businesses is absolutely insane. It's our highest growing market. By a mile, because we've had the individuals down for a long time. The business is crazy. Everyone's doing stable coins. A lot of people are accepting payments in crypto. They have a treasury. The number one rule, I'll keep it to number one rule because I could talk for 45 minutes on this.
Right.
Do not mix your personal transactions with your business transactions. You will cause hell for yourself. And I see it all the time, and you're going to end up paying a CPA 30 grand to fix it. So please, keep them separate. If it's a personal trade, keep it on a separate wallet. Keep it completely out of your business. You do not want to intermix funds because it gets ugly and the IRS does not like it and they will drop a very heavy hammer on you. So new businesses in crypto, just don't do that. And
I love that.
I'll rest my case there.
Yeah, no, I know, because we could go into a lot of different avenues with that, and I don't want to stress people out, because most of the people that are listening are just potentially traders themselves, individuals that are trading. I always am infinitely curious, though, about companies that are buying, Bitcoin and holding Bitcoin. Like, obviously that's a taxable event for them if it appreciates, right?
No, not until they sell or swap it. I mean, if you want to swap Bitcoin for Ethereum or wrap it, go from Bitcoin to wrap Bitcoin, I mean, that becomes taxable. very rare. They don't really do that unless they're a crypto business, and obviously they're mining and they have hundreds of thousands of transactions a month. I see it all the time. That's a different game, but mostly it holds in a treasury. Buying it is not taxable. Selling it is taxable.
Okay, okay. And for business startups, let's just say really generally, are there any like forms that you can give as examples for what they would need? Like let's say it's just a crypto business accepting crypto payments, for example. Or
Mm-hmm.
like, like for example, me, like I have a crypto podcast. Like what if I started accepting crypto payments like from guests that want to come on? Like what does that look like? I guess how do crypto businesses comply with taxes very generally?
Heck of a question. And the thing about my personality, Vanessa, is I will never sit here and BS with you. I did not do business taxation when I was in crypto. I was only doing individual. So I cannot answer that in good faith. There are a lot of great crypto specialist CPAs. I'm no longer practicing. I'm doing, I work on behalf of some.
Yeah,
So I
yeah.
actually don't know that in full confidence. However, I do know the software has it, and CPAs that know what they're doing more than I do in this specialty will be able to answer that question.
Do you guys for some like are CPAs like connected to some? Is that how that works? Like you download
Oh,
your
yeah.
okay. So are there any people there that do specialize, I mean, I'm sure in crypto businesses or
Oh, a ton of them. We're actually coming out with a recommended CPAs page soon. But yes, there's, I would say, 100 major players that only do crypto recon, crypto tax planning, everything. If you Google it, you will find it. We're actually gonna have a page on our website by the end of December where you could go and find them. But I do want to show something now that you say that, because we have thousands and thousands of accountants that use this platform. And the real value here, if you are an accountant, is you have a unified dashboard here. So they have thousands of clients. They're all here. You'll just go jump into it, do their recon forum, download the report, send it over to them, and send them a bill. So it's incredibly, incredibly useful for accountants, more so than, I mean, obviously valuable for individuals, but accountants are a huge player in this space. They have thousands of clients and they handle it through our software. We sell that workflow to accountants quite frequently.
perfect. Yeah, no, and I honestly, James, like I appreciate that honesty. We are expecting to have a few other CPAs come on the show in the near future as
Mhm.
well. So I'll make sure to that's a good point to bring up next time too, if any of them have any information too on businesses, just to kind of
Oh
help
yeah.
the yeah, no, but you've been like more, you've been amazing so far for personal, and I really truly think people just need personal. If you're like on an advanced level where you have a crypto business and like you're probably already working with an accountant at that point. I mean, I would hope so. So,
For
um,
sure.
but let's switch gears and let's talk a little bit about the scams and stuff. Do you have any stories in regards to like crypto scams that you can share? Because I think that's so important to mention too.
Most definitely. It's way,
Unfortunately.
way too common. And these scammers, I will give them props. I'm not endorsing it, but I will give them props. They're very sophisticated, they're smart people. Um, One of the ways I actually got, I would say, known in this industry is handling the scams with a good friend, Justin Zanardi, who's actually our head of product now. He's a CPA. And Justin actually put in the brain work to create an IRS codification, making tax and theft laws fully deductible under IRC 165C3, meaning that when you do get scammed, if you entered it with intent to profit and it turned out to be a Ponzi scheme, you could take that entire loss. I had one lose more than $10 million, millions and millions of dollars worth of crypto. They get scammed out of it. Someone hits them up on the internet. They're like, hey, we have a new exchange. It's great. It looks legit. Very high staking rewards, very high yield. And they're like, great, I'm making a ton of money. Turns out it was all fake, and that crypto is never to be found, and they're never going to get it back. So the most glaring example of the most recent major, this was a bankruptcy, not a scam, but also deductible, is Celsius. And their CEO is actually sitting in jail right now.
Right.
And they didn't have the liquidity to cover the withdrawals. And then all of a sudden the exchange went down and, people were left holding the bag. And that's where it comes to not your keys, not your coin again. you didn't actually own the crypto. So scams are very common, but do consult a CPA now because it is deductible. So you probably won't be paying capital gains tax for a very long time.
That's amazing. Yeah, if you are experiencing a loss in crypto, and is all crypto taxable? Like, let's say I only have $1,000 in crypto, is that taxable?
Yes, it is.
So there's no like minimums or maximums. Any amount of money that you have in crypto is taxable.
Yeah, not at this time. The IRS is kicking around the idea of a $3,000 threshold, but at this time, no, it's not in effect.
That's amazing. Yeah. And I know that the Celsius scandal was like a huge thing for you in regards to like discovering your crypto path as well and wanting to be a part of this. So that's really important. And I guess like for people that have experienced the Celsius scandal in that time, so you're saying that all if they experienced a loss, they basically wouldn't be held accountable for that loss, or is that something that's now happening outside of the Celsius scandal?
Great question. So it was after what they did is they gave distributions in actually four parts. Part of it, which was in stock. It's a very unique case. It's very funky. And once those distributions were had and the bankruptcy court was settled, then all of a sudden you can now take that loss. And it's not that you're saving money. It's not free money. What it is you take the fair value of what you had versus what you got back and take that amount, you can reduce your taxable income. So if you made, let's say, $150,000, you have a $70,000 loss, all of a sudden you're paying 21% on 80,000 instead of 150. And you can carry it forward.
Okay. Okay. Awesome. Yeah, that will definitely help a lot of the millionaires that are out here. It's not me, but
those poor things. Not me either.
I know. No, honestly, James, you've been amazing. I wanna talk to you generally about the crypto space too, like outside of being a CPA. What do you think?
Yep.
Because we do live interviews for crypto all the time, and we try to get the public's opinion about crypto and the disconnect. I want to ask you, what do you think is the biggest disconnect in the crypto space? What do you think people don't understand about crypto and, that makes them not be a part of the space?
Mm-hmm. Yeah, one word there. Fear. People fear what they don't understand, kind of like a snake. Snakes not going to hurt you. They're not really aggressive animals, but they're scary because we don't understand them. Crypto people don't understand. Ones that do are doing pretty well right now. I mean, not right now. It's kind of a bloodbath, but people that have understood that for years understand it. So don't be scared of it. It's becoming increasingly mainstream. I mean, you see the BlackRocks hopping in. You see the Citibanks hopping in. Those are pretty big indicators that it's not going anywhere. Stable coins are going to change the world, in my opinion, because that's going to be the way businesses transact, because there's no holding your money for 4 days in a bank, getting approval to send your own money. It's ridiculous. So just start soft education. There's newsletters out there. There's AI. I mean, incredible resources. And I think 1 in 5 people in the US now do own crypto, so it's getting there. However, just don't be scared of it. It's not a scam. People like myself, the IRS, attorneys are now specializing in it. So the regulations are coming. I think that's what scares people away, is they're like, oh, it's the Wild West. I don't know what I'm doing. It's big, it's scary. That's changing quickly because enforcement is actually coming in, and kind of like stocks used to be. I mean, it was unregulated at a certain point, and it is scary, and I do understand it. But yeah, it's not going to disappear. I assure you that. It's only going to get bigger.
I talked to so many people about the stock market when the stock market was getting created, and this is like way back in time. I got to check my facts, but I'm pretty sure it was like the 16 or 1700s. But there was so much doubt around the stock market when the stock market was getting created, and now look at where we are in time. So it's just, you're so right. People do fear crypto. They don't understand it. It's unregulated. People don't know who to trust. We've experienced a lot of scams and a lot of fraud. But I do think now that it's getting regulated within this current administration, a lot of people are awakening and opening up to it. Now, I am not as involved in the stablecoin movement as I am more so in like other things in the crypto space. So you're saying that a lot of businesses now are using stablecoins to transact with, are you saying like with other businesses? Is this like on a DEX? So like a lot of businesses are trading on DEX through stablecoins with each other? That's what you're saying?
That's correct. And for the audience that doesn't know the term stablecoin, it's essentially, it is a one-to-one peg with the US dollar. So it's never going to fluctuate in value. It's always worth $1. It's just a form of a blockchain where I could send you $1 in crypto. It's worth $1. Then you could all of a sudden off ramp onto a Coinbase and take your actual fiat. But if you want to get money instantly without approval from one place to another, you send stablecoin. And that's what's happening over and over and over. Thousands of companies are adopting it. Payroll companies are adopting it. And it's a crazy takeover. And that ties right into crypto, because when you enter a liquidity pool, you're doing half stablecoin, half digital asset, and that's how you enter the liquidity pool. So stablecoins are all involved in crypto. It is crypto, but it's one-to-one pegged. So you could treat it as $1. It will always be worth $1.
You can trust it a little bit more. That's perfect. And where do you know? I mean, I know we're kind of venturing off, but do you know where a lot of businesses do this? Like, is it on Coinbase or is it on a DEX? Like, you work with a lot of businesses, or I know you said you don't do businesses particularly, but do you know where a lot of businesses are doing this stuff?
I don't, because they're using our software to do what they do. I mean, they're using a lot of these DEXs, like the MetaMask, all that stuff, depending on what they're doing.
That's what I would
think.
But again,
I'm gonna steer away from it because I never practice as a business CPA. Ton of businesses use our product, but I don't have a hard answer for you there.
No, that's perfect. No, I'm just picking your brain. But
sure.
So I want to end this episode with giving some people some guidelines and some resources about how they can walk in your footsteps. And I know that you are kind of a little bit self-taught, but maybe if you have like any recommendations, or maybe people that you can recommend, any books you can recommend, or just anything to help somebody be able to walk in your footsteps one day, what would be your recommendations?
Most definitely. So there's actually a pioneer in this industry. He's a Forbes top US crypto CPA. His name's Patrick Camuso. He's in New York City. He's all over the internet. He's coming out with a crypto tax handbook, I think in a month. And that's going to be essentially a one-stop shop for everything you need to know there. So I do want to keep him on people's radar. He's been in this game a very long time. He's an OG of the industry and very, very good at what he does. So keep an eye out for that. But furthermore, I mean, teach yourself with AI. That's what I did. I had a ChatGPT thread that spanned 6 months, asking it the dumbest questions you could possibly think of. And eventually, if I could learn it, trust me, you guys can learn it. And again, the biggest takeaway here is it's such a low barrier to entry because CPAs are scared. You don't need to be a CPA. Become a crypto tax specialist. You don't need to be a CPA at this point, which is why it's such an incredible opportunity for people. Get good at it. There's not a ton of competition right now, and that will change in the next 5 years. So the time is now.
So you do not have to be a CPA in order to be a crypto tax specialist, but how are those two different from each other?
Look, a CPA is credibility building. I mean, people trust a CPA because we're certified in the tax realm. However, a lot of the best people I know in this industry, I'll be frank with you, that know a lot more than I do, are not CPAs. They just got into crypto tax and they got very good at it. They're crypto nerds. They've been in the game a long time, a lot longer than I have. And they're studs. They make a ton of money. They drive a lot of value to people, which is the way you make money. You bring value and then the money will come. So no, you don't necessarily need the CPA. I'm not going to say it doesn't help.
Right.
It does if you want to practice, but I mean, go to these crypto accounting firms and they'll hire you and they'll teach you a lot.
Wow, that's awesome. Honestly, that's like good to note myself. Not that I don't love the podcast and everything that we're doing here, but it's just it's nice to have a little extra credibility on the side. So I'm just like infinitely curious about that too. But I'll definitely talk to you after this. I have some like additional questions to give you. But anyways, before we close out, is there any last pieces of wisdom, advice, anything you want to give to the people before we depart? We'll have all your resources listed below. So if anybody's interested in contacting you, of course, you guys will be able to get in touch with James, but just anything you want the people to know before we depart.
Pay your taxes. There's no hiding. And then my Twitter is also 5 days old. It's James Crypto CPA. And I post some bangers on there. I'm a big meme guy. So check that one out.
We definitely will. That's awesome. And definitely we'll have, like I said, we'll have everything down below if anybody's looking to contact you. I definitely want to be in touch after the show. We'd love to have you on, in a year or so to see where you're at. Because I know you said you've only been in crypto for about a year now, correct? Mm-hmm. That's awesome. And
professionally.
also, yeah, and also you go to a ton of events, right? You said you go to the Las Vegas, like you went to a crypto Las Vegas event
Yeah.
or
Yeah, in the past 3 months, I've been to France, Australia, Singapore, Colombia, Miami, New York, Toronto. I mean, it's everywhere. It's a traveling circus. I actually live in Vegas now, so Vegas is one of them, but that's down the street.
is your job remote or
Yeah, yeah, fully remote. So do a ton of traveling because meetings, conferences. Crypto's a traveling circus. It is a lot of fun, a lot of work, but a lot of fun, and everybody's cool. So that's the other beautiful part for young people looking to break in the industry is not your classic white collar job.
yeah, there's so much opportunity here, you know, and I say
Crazy.
that I say that across the board too, like with smart contracting and a lot of people getting into computer science, like now, you know, you can get into blockchain, like it's so new that you're right. You do not need to have like X amount of years of experience to be able to thrive in the crypto space, all the more opportunity to get invested and involved in it. So James, thank you so much for coming onto the podcast. You were extremely relatable and awesome, like so easy to talk to. So I really appreciate that, and I'm sure a lot of other people watching will appreciate you as well, and everything that you've given us this podcast episode. Thank you everybody who was watching this podcast episode. If you guys have any questions, you can comment directly below on Spotify or on X if you're seeing this now. So thank you guys again. Thank you James again, and we will see you next Monday on Cryptic Humility. Thank you.